Coming up today, the market rebound led by Nvidia. Retail buys a record amount, whilst Nancy Pelosi sold. Alibaba releases a groundbreaking new AI model. What Steve Cohen says about all this, mega cap tech earnings on deck, and what could unravel this rally starting tomorrow. You don't want to miss this one, guys. Let's go. And so it almost looks like an exact mirror image of the heat map we got yesterday. Mega cap tech having a pretty good bounce back here today. While the rest of the market, especially those defensive sectors that caught a bid yesterday, had a bit of a pullback here today. In healthcare, consumer defensive, even the utilities were red today, except for those new age power ones. Vistra, Constellation, GE Vernova bounced back along with the nuclear trade, which I'll show you all soon. And look at that bounce back on Nvidia, really holding ground there on volume today. After just taking out yesterday's lows, just going down to a 5-minute chart, we can see that in early morning. And so was this a classic shakeout of weak hands on a low substance narrative of an apparent $6 million Chinese startup knocking over the entire American tech industry? Because technically speaking, pretty bullish candle here today after taking out yesterday's lows and then finishing above yesterday's high on the back of a lot of bullish seasonality coming into Nvidia over the coming weeks and months. Still about a month out from their earnings. This was a pretty good sign from the market today, especially with all the news we're going into tomorrow, with the Fed meeting and mega cap tech earnings, which I'll get into in a bit. So Nvidia finished up almost 9% today. We're getting news that retail investors bought a record amount of Nvidia stock in the sell-off yesterday, totaling a net 562 million, largest amount on record going back to 2014. And this is contrasting what the Queen of Wall Street just conveniently did a couple of weeks ago, Nancy Pelosi, selling her 10,000 shares of Nvidia stock and what's looking like another potentially well-timed trade. So does she have the inside, or was worried about the potential advancement of China in AI? On the other hand, we just heard from Kramer today, Nvidia trying to make a stand here. I think it is still too early to buy. Have to clean out more sellers. No real crescendo. Let the sellers sell. Don't take them out at higher prices. And it's not just Nvidia either. Taiwan Semi had a pretty good bounce back today. Was mixed across the board. Broadcom, along with ARM, bounced back. And there's the whole sector putting in a hammer candle, trying to find support here. And just looking at my themes watch list, which I've just updated again today, now approaching almost 150 tickers in this. If you want to download this for free into your TradingView platform, just click the link below this video. And so we're getting a pretty nice bounce back today in the nuclear trade. Like I was saying yesterday, I don't think the huge electricity demand is going to collapse because of some AI app coming out of China with bold claims as to the costs surrounding it. And so we're getting some nice volume coming back into this sector today, along with a few other isolated spots of green and recovery. We've still got a bit of volatility out there, just looking across the different themes. Some stocks continuing to pull back, others still trading really well. A few space stocks here. And what's really been doing well are stocks surrounding agent AI. So if AI is going to get a lot cheaper and more efficient, if companies go from focusing on buying as many GPUs as possible to just optimizing them as best as possible, like DeepSeek has demonstrated somewhat, then that's good for the companies that are looking to infuse AI into their products. Seen a pretty good rally here in Apple the last couple of days, even though they got earnings in 2 days. And that's because they don't really create any new technology. They just take cheap hardware commodities, package them all together, slap an Apple logo on it, which allows them to market up to multiples of their cost, being the #1 brand in the world. So any advancements in AI allow them to do more for less, and will just add to the iPhone user experience, which should encourage a much larger upgrade cycle if the product does grow leaps and bounds. Similar story with Microsoft, rallying hard into its earnings tomorrow night. They're already big in AI agents, and others as well, catching a bid. Salesforce the last 2 days, HubSpot, UiPath, and Asana. Same deal with some other data analytics and storage company, trading pretty healthy there today. Little mixed in quantum, along with some other sectors doing pretty well. Cloudflare, cybersecurity, trading pretty strong there. Bounce back in aviation stocks, and Bitcoin just sitting above $100,000 a coin. And there's Reddit actually breaking out as well. But tomorrow will be the big one. We've got earnings after close for Microsoft, Meta, which also just broke out to a brand new all-time high, and Tesla, which has been pulling back on low volatility going into earnings tomorrow night. Investors will be really paying attention to the CEOs of these companies and whether they're going to indicate any slowing down in capex, their capital spending on GPUs. Because if so, that could cause a sell-off in the market, and for this AI bull to potentially unravel somewhat, or at least move to a new phase where the picks and shovels hardware makers underperform, like Nvidia and the chips, which have been doing really well these last couple of years, and the front-end users of their hardware outperform, as they've already built out their AI stack, and they can just fine-tune it to pump out really profitable products. For Tesla, investors will be paying attention to their guidance. Elon had mentioned he thought they might be able to achieve 20 to 30% delivery growth this year. Pretty ambitious target. Also, we want to know when the cheap $30,000 car is coming, when a robo-taxi is going to be rolled out, along with the latest numbers on the exploding growth in their battery storage business. So make sure you come back to Click Capital tomorrow night. It's going to be a good one. I'll break down all the latest numbers from these important companies earnings for you, along with giving you my analysis and thoughts on it all. Some of my other favorite long-term holdings doing well today: Tiger Brokers up 9.5%, as some Chinese-related securities have been holding up here. And Moderna, which I first mentioned to you guys on my first daily market review last Wednesday when I came back. This is another long-term holding of mine, which looks to have potentially found a bottom here. Heavy accumulation off this gap down after the 13th, and doing really well today, going into their earnings tomorrow night as well. Alibaba up 6.7%. On the back of the news, they just released a new groundbreaking AI model as well. Interesting timing, right? Keep in mind this stock still has a forward PE of 11, still a massively asymmetric bet in my opinion. That's why I continue to remain long the stock, and we'll talk a little bit more about their AI model in a minute. First, just going over some other Chinese tech, looking at the ETF K-Web there, shaping up pretty nicely as well here on volume. Just got a momentum thrust signal here, which shows a forceful move in the market, and FXI as well, pushing up. So maybe 2025 is the year Chinese tech bounces back, as they're really the only country that compete with the United States on the same scale when it comes to AI and robotics. And so I think yesterday was another good buy the dip opportunity in robotic related stocks. Just heard from Jensen Huang again yesterday. He did an interview with another niche tech blogger, so not really in the mainstream media. And I thought I'd just share it with you guys again here today, something he's been talking a bit about lately. And this clip goes for a minute and a half.
Everything that moves will be robotic someday, and it will be soon. You know, the idea that we'll be pushing around a lawnmower is already kind of silly. You know, maybe people do it because it's fun, but there's no need to. And every car is going to be robotic. Humanoid robots, the technology necessary to make it possible is just around the corner. And so everything that moves will be robotic. And they'll learn how to be a robot in Omniverse Cosmos, and will generate all these physically plausible futures, and the robots will learn from them, and then they'll come into the physical world, and you know, it's exactly the same. A future where you're just surrounded by robots is for certain, and I'm just excited about having my own R2D2. And of course, R2D2 wouldn't be quite the can that it is and roll around. It'll be a, R2D2. Yeah, it'll probably be a different physical embodiment, but it's always R2. You know, so my R2 is going to go around with me. Sometimes it's in my smart glasses. Sometimes it's in my phone. Sometimes it's in my PC. It's in my car. So R2 is with me all the time, including, when I get home, where I left a physical version of R2, and, whatever that version happens to be, we'll interact with R2. And so I think the idea that we'll have our own R2D2 for our entire life, and it grows up with us, that's a certainty now.
So again, he seems to be mentioning once again robotics. Wasn't just a one-time casual mention. Seems to be front and center on his mind, and where he really sees this AI bull market going next into the physical world. Now that AI has pretty much conquered language, we're really waiting for the next step, AGI, artificial general intelligence, that understands not only language but the entire world and how to interact with it. It can think like a human. It can be creative, understand emotions, understand different situations, the right thing to do, along with visual and object processing and recognition. Tesla cars are pretty much already there, similar technology, and an Optimus bot as well. And so I continue to be excited about investing in robotic related stocks. And no doubt it won't be the last growth scare we see in this, because these big trends become so obvious, inevitably attracts a lot of hot money. Then it just takes a little bad news to shake out all that hot money. That's why not many people can stay invested in these themes for multiple years. Anytime we get a little 10 or 20% pullback, a lot of people sell, throw in the towel in fear. So I'm sure we'll see plenty more of them. But I agree with this article headline that open source AI is a good thing. Overall long-term net benefit just makes AI more accessible, more cheaper, and gives it more use case. And like billionaire investor Steve Cohen says, AI will be a decades-long theme, just like we saw yesterday. It won't be a straight line. The markets never make it easy, but if you understand and have conviction in the underlying fundamentals, you can use that volatility to your advantage and buy the dip anytime we get these fear spikes in the market. And like I said, that's not to take away from what the Chinese are doing. Like I said, it will be a battle between the United States and China. It already is. Sam Altman, the guy behind ChatGPT, OpenAI, said DeepSeek's R1 is an impressive model, particularly around what they're able to deliver for the price. But he said, we will obviously deliver much better models And it's also legit invigorating to have a new competitor. We will put up some new releases. And looks like his boss called them in for a meeting today. Satya Nadella, CEO of Microsoft, probably got together with Sam to talk about DeepSeek. So maybe it is a Sputnik moment for American AI. Like Trump said, this just shows US companies need to stay on their toes and ahead of their game. They do have legit competition coming out of Asia. But like I mentioned yesterday, the claims that they had done something similar to ChatGPT on outdated Nvidia chips for $6 million was really far-fetched, if not plain propaganda at a pivotal time between Chinese and US relations. Even DeepSeek itself, the chatbot admitted to using the latest Nvidia H100 chips, which they've already quickly censored. But again, they are coming up to USA capability with their models. Alibaba just released a new one with some in the industry saying on some measures it could be one of the best on the world, on par with OpenAI. Also capable of controlling PCs, smartphones, can handle a range of text and image analysis tasks, from parsing files and understanding videos to counting objects and images. And this to me smells of the CCP having planned this and most likely putting their resources behind these companies now and trying to bring their AI and chips up to speed with the Americans. That's why I think the Chinese have gone from harshly clamping down on them, regulations, to now trying to get underneath them. They're actively trying to get underneath their stock and property markets, and along with these important industries, AI and robotics. And like I said, on some measures, their Quen model exceeds DeepSeek, Meta's Llama, GPT, and Claude on some technical measures of its efficiency and capability here in the red versus the others. So the Chinese are the real deal competition for sure. But like I said, censorship and being able to scale, they will need a lot of Nvidia GPUs, even if they are the best at optimizing them for max output. It was also interesting to see in this big Chinese inspired sell-off yesterday, it just so happened the Chinese consulate general was ringing the bell at the Nasdaq, celebrating the Chinese New Year. I guess that was just a coincidence as well, or maybe the Chinese trying to make a statement right in the engine room of arguably America's biggest strength, their stock market. There they are ringing the bell, causing a massive sell-off on the same day. But like I said, I wouldn't count Nvidia out just yet. For sure, they're inevitably going to have downside pressure coming for their margins. No company can hold on to 90% gross product margins forever. It's basically just printing cash. However, with forward earnings in the low 30s, it's not that ridiculously priced either. Even if margins do likely compress, we'll still see volume growth, could counteract that. But for sure, we may not see those huge triple-digit growth in revenue and earnings year over year. That may start to slow down. But like I said, we may move on to the next stage of agent and physical AI. Also making our way into the thick of Q4 earnings season. Just got a bunch out today. Starbucks, slight beat, along with Royal Caribbean Cruises. I just took a Royal Caribbean cruise lately, and all the cruise liners doing really well today on the back of their solid beat. And I got to experience firsthand why they're such powerful businesses. Like a massive Vegas hotel on the water, pretty much a monopoly. You can't just walk down the road and go somewhere else. So you end up spending a lot on board. Also got earnings from General Motors. Even though they beat expectation on earnings, the market sold them off, as they did mention they're worried about tariffs. A lot of these legacy automakers outsourced a lot of their parts and stuff to Mexico. That's why Tesla's more insulated from tariffs, as Tesla has the most all-American made car, looking at the percentage of parts produced domestically versus imported. And like I said, we got the big one tomorrow with Meta, Microsoft, and Tesla. They mention any big planned slowdowns in their capex spending. Going to see Nvidia and the chips sell off hard. I'll have to wait and see how it affects the rest of the market. Might get another monster rotation. Otherwise, they very well could reiterate they plan on to continue spending big. I still think it's an arms race for who has the most compute power. And even if this whole DeepSeek thing is true, that's great. DeepSeek got their chatbot with a couple of thousand GPUs. Imagine what all these mega cap tech companies can do once they hit 1 million. AGI may be closer than what we think. Market is still following a soft landing scenario. S&P 500 holding ground after the Fed has started cutting. And that's because the Fed cut because it can, not because it has to. Could potentially following similar scenario to the mid-late 90s when the Fed cut, the market continued to rally into the peak of the bubble, 99, early 2000. Very well could see the same thing again on the back of the AI boom. But what else could cause a pullback in the market is if Jay Powell changes his tune. Trump really wants him to lower rates. The two don't really see eye to eye. In my opinion, Jay Powell really wanted the Democrats to win, so I don't think he's just going to bow down to Trump straight away. Market is still pricing in 2 rate cuts this year, but I'm not so sure about if we'll see that. Kind of hard scenario to see the economy and markets doing really well and inflation nosediving, unless we got a really deep correction in oil, which again is something Trump's also trying to pull off. Because if Fed rate hikes slipped back into the narrative, we started seeing the 2-year creeping closer to 5%, cause a bit of a repricing in the stock market, give us that 10-15% correction. As bonds and money market funds will look a bit more appealing. But as it stands at the moment, the 10-year around 4.5. That implies a PE around 22, similar level for the S&P 500, even at the index level. But looking at the medium PEs, because they're all skewed by mega cap tech, a lot of stocks trading 17, 18 PE, which isn't that demanding if they can keep growing their earnings. Also interesting to see today, X take its first step towards its everything app with a Visa deal. Musk got a lot of experience in finance. He helped create PayPal, which was sold to eBay, which they later spun off, now becoming a much larger company than eBay. So X partnering with Visa, giving X users a digital wallet, allowing them to transfer funds, make peer-to-peer instant payments, and connect with traditional banking. So it's kind of taking the best features of crypto and just applying it to traditional banking, digital payments. And so we should expect to see more financial offerings from X, even high yield accounts, more on communication as he turns it into a super app. Also interesting to see today, Norway, known for having a huge amount of oil and gas reserves, one of the largest sovereign wealth funds in the world, as they've done a great job investing that. I think they own close to 5% of all the world's stocks, actually. They're set to become the first country to fully transition to electric vehicles, with EVs accounting for less than 1% of total auto sales in 2010 to almost 89% last year. Shows that even an oil-rich country can still transition to fully electric successfully, selling their oil and investing it in future technologies. So again, this is another secular trend I see as inevitable, but of course, there'll still be internal combustion engines for a few more decades yet. They'll just become more of a niche product. Also interesting to see today, United States company Boom Supersonic made history with its XB-1 jet, the first civil aircraft to go supersonic on its historic test flight. Here's a look at their website. They're not yet listed on the market, but just goes to show another advancement in technology and buzz around the aviation industry, along with electric vertical takeoff, drones. This industry is gathering pace as well. And some of these aviation stocks caught a little bit of a bid today as well, along with drone maker Red Cat bouncing back. And just looking at the rest of the market, getting a little bit of a VIX crush here, 16.4, with the 2-year continuing to pull back as we go into the Fed interest rate decision tomorrow afternoon. Paying attention to Jay Powell's language, see how the 10-year reacts as well at 4.53. High yield credit spread still super low, 2.66, and there's crude just sitting underneath $74 a barrel. And like I said, make sure you come back tomorrow for Microsoft, Meta, and Tesla's earnings. I'll break down all the numbers for you. Other than that, the real standout for me today was Alibaba on the back of their new AI model, and we'll see what they come out with their earnings tomorrow. And so the risk for the market, if Jay Powell and his language is somewhat hawkish and mega cap tech CEOs talk about dialing down their capex, that could cause a bit of a sell-off in the market. Otherwise, we should see a bit of volatility going into that, as investors might remain a little bit on edge and uncertain. Otherwise, if Jay Powell comes out dovish, mega cap tech reiterates capex, that should calm tensions in the market. The VIX should drop further, and we may see the S&P 500 break out to new all-time highs again. Thanks very much for sticking with Click Capital, and I'll see you again tomorrow night. Cheers.